Today, we'll be exploring the fascinating world of cryptocurrencies. While Bitcoin may be the most well-known, there are actually many different types of cryptocurrencies out there. In fact, we can identify at least 4 types of cryptocurrency depending on their formulation, application, and other factors. Cryptocurrencies can be differentiated based on their characteristics and functionality. Although the term cryptocurrency is used to refer to all digital currencies, it is commonly used to refer to coins. Coins are based on their blockchain and act as the native token and payment token for the blockchain network. Tokens are digital representations of assets or utilities in a blockchain network and are differentiated by residing on top of another blockchain network. They are coded to facilitate smart contracts on blockchain networks and are embedded in self-executing computer programs or codes. Tokens can represent loyalty points, commodities, or other cryptocurrencies. They are faster to develop compared to coins since developers do not need to edit or code the blockchain from scratch. Tokens can be issued without the need for ICOs or IEOs. Altcoins, on the other hand, are alternative digital currencies to Bitcoin and are understood to be alternatives to the first cryptocurrency. A utility token serves a specific function within a blockchain project's ecosystem and is not intended to function as a real-world medium of exchange like Bitcoin. Also, it is often used to grant holders access to a particular product or service within the project's ecosystem. Examples of utility tokens include Matic, Link, BNB, UNI, Mana, ENJ, R, and BAT. A security token is a digital asset representing ownership or rights to a value that can be transferred from an asset or bundle of assets to a token. In essence, they digitize traditional investments such as stocks or bonds. Companies can issue fractionalized ownership of their company through a digital token to investors on an exchange that allows digital security tokens instead of issuing stock. Examples of these are SIA funds, CAP, Blockchain Capital, and Science Blockchain. Payment tokens are digital representations of value maintained using blockchain technology and used for buying and selling goods and services on digital platforms without an intermediary. They are not legal tender issued by governments, but can be exchanged for goods and services. Of course, the majority of cryptocurrencies and tokens fall into this category, whether they are security or utility. However, not all utility tokens can be payment tokens. Examples are Bitcoin, Ethereum, and Monero. Exchange tokens are primarily issued and used by cryptocurrency exchanges, acting as a means of facilitating exchange between other tokens or as utility payments. They can provide benefits such as cheaper fees, increased liquidity, voting rights, and access to specific exchange services. Exchanges use them to incentivize participation in projects and increase liquidity. Examples of exchange tokens: Binance Coin or BNB token, OKB for OKEX Exchange, KuCoin token, Uni token, Height for Wobi Exchange, Shushi, and CRO for Crypto.com. Non-fungible tokens, NFTs, are unique digital certificates of ownership that represent one-of-a-kind assets on the blockchain, such as art, collectibles, or limited edition items. They cannot be exchanged for another and are typically used by artists, creators, and collectors to sell their items in NFT marketplaces. NFTs allow for partial ownership of expensive assets, auctioneering, creating unique moments, and preserving histories, and are different from initial exchange offering tokens. Good examples include Logan Paul's video clips, Twitter founder Jack Dorsey's first tweets NFT, Everydays, the first 5,000 days drawings by Mike Winkleman, better known as Beeple, and several CryptoKitties. Decentralized finance is a system powered by blockchain and cryptocurrency technology, forming an alternative to the traditional financial system. It offers financial products to users without intermediaries like banks and exchanges. Most DeFi tokens are based on the Ethereum blockchain, and users can earn, lend, borrow, invest, buy insurance, and more through these tokens. In spring 2021, Maker, Compound, Uniswap, Aave, Chainlink, and Anchor are among the most popular DeFi coins. Stablecoins are tokens with a stable value that are backed by stable or fairly stable assets like fiat or gold. They are designed to eliminate volatility in assets and other digital currencies. The assets backing stablecoins must be kept in reserves according to a defined ratio, and there are several types, including those backed by fiat, crypto, commodity, and algorithmic stablecoins. Examples of stablecoins: Tether, which is backed on a 1-to-1 ratio with USD fiat, the same as TrueSD, Gemi Dollar, and USD Coin, and Paxos. Digix Global, DGX, and Gold Coin, GLC, also serve as stablecoins backed by gold. Algorithmic backed stablecoins include Ampleforth, AMPL, DeFi Dollar, USDC. Privacy coins are cryptocurrencies that provide better privacy than mainstream crypto like Bitcoin, and are used for sensitive transactions, investigations, and as a right to privacy. They employ various methods such as coin mixing, anonymity techniques like coin join, and offline transactions to ensure transaction privacy, and do not tie real-world names to crypto addresses. These are the top privacy coins. If you're a beginner looking to invest in cryptocurrency, it's important to understand the different types of cryptocurrencies available. The most common types are payment tokens, which are ideal for investment purposes. However, security tokens are considered the safest option since they are regulated, while utility tokens carry higher risks due to their lack of regulation. Before investing, be sure to do thorough research and only invest what you can afford to lose. In conclusion, cryptocurrency is a vast and diverse world with different types of coins, tokens, and applications. As an investor, beginner or not, it is crucial to do thorough research before investing in any particular cryptocurrency. It is important to understand the technology behind each cryptocurrency, the market trends, and potential risks before making any investment decisions. Remember to invest wisely, diversify your portfolio, and always keep an eye on the market.